Boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph James. It's Tuesday evening, January the 8th. Welcome back to your nightly newsletter. You know, I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best opportunities setting up for tomorrow's trading session so we can execute the plan with all of our advanced members in our trade room. And tonight we're covering crude oil, S&P, Nasdaq, gold, and of course we can't forget about the mighty euro. Crude is bullish and still trying to reach that somewhat elusive $50 a barrel target that we talked about in last night's newsletter, and I hope I get a pullback so I can find some buying opportunities before we get to that news tomorrow morning, right? Tomorrow's that weekly inventory report. We'll grab the oil market in a moment here. The S&P is bullish at the high of a range tonight, and of course I'm expecting buyers to try buying the next pullback where I'm going to look for them to fail so I can then sell into their stops and hopefully sink this sucker back down into that range tomorrow. Nasdaq is very similar to the S&P, but we're at the top of that trading range of the Nasdaq. We're bullish on the NQ, top of the range. I want to sell the top of this range, but I've got to wait for that two-try failure pattern to sell those highs on the Nasdaq tomorrow. Gold, very similar. Gold is bullish and looking for a short covering rally up off the low of that range we talked about from last night. We get a little taste of that move this morning in our trade room off the low. Now we're looking for those sellers to finish this failure so we can run this sucker back up into that range on gold. Could be a real busy day tomorrow on the yellow metal. And of course, we're going to wrap it tonight on the euro. Euro is bullish and choppy around that 15,000 round number. And I got my eye on buying opportunities, looking for a trap down around the low of a sneaky little hidden channel on the euro tonight. So we're going to break this down. We'll open up all the charts: euro, gold, Nasdaq, S&P. We got some strong moves on the chart tonight, but I'll tell you, some of these moves appear to be head fakes, while some moves are definitely legit. So how do you know the difference? That's definitely the subject of tonight's nightly newsletter. And of course, as always, got a great newsletter in store for you guys and gals tonight, setting up our most reliable patterns for Wednesday's trading session. But before we jump into the charts though and put the plan together, I need to remind you, make sure you never miss a video by joining our mailing list. You'll find the opt-in form right there in front of you, right there on the homepage at sidewaysmarkets.com. I'll put all the links you need to register for this in the description of the YouTube video. If you're on our blog though right now, make sure you check out that opt-in form. That way you never miss another great video. And also don't forget, if you're not joining me tomorrow in the trade room, the next best option is download all the charts from tonight's video. If you're here on the blog, there's a big button right below the blog, right below the video tonight, that gives you an option to download all the charts. If you're on the YouTube channel right now, make sure you check out the description and I'll put the link there to download all the charts there. And don't forget, if you have any questions about anything covered in this video tonight, you can always hit me up on live support, right, or call that toll-free phone number. And of course, you can also drop questions in the comment section, right? The comment section, if you're on YouTube, you can drop a comment right in the bottom of the page here, also on the blog. And don't forget, if you like what you see, please help support this channel. Give me a thumbs up, make sure you subscribe to our channel, and make sure you hit that bell icon so you get notified every time I publish something new. All right, always great to be here with you guys once again this evening. The sun just broke free of the clouds here in Los Angeles. Hope you guys aren't freezing and wet out there somewhere. Hope you guys are warm and dry somewhere this time of the year, right? Always a little bit dreary weather. But let's not waste any more valuable time. Let's get ready for tomorrow's session. Let's take a look at the schedule for tomorrow. Tomorrow's Wednesday, January the 9th. We're going to start seeing things really heat up tomorrow. Lots of major news as we get closer to, right, the middle to the end of this week. Tomorrow's, of course, January the 9th. Right now, tonight, I'm not sure if you guys saw the headlines on that, but we got it's not a press conference. I believe it's like a speech he's got prepared, but we're going to hear from what I've been told, I believe it's 9 o'clock Eastern time. We're going to hear from Trump tonight, appealing to, build his wall. So, whatever your opinions are about that, well, those are really unnecessary right now. Right now, though, we do expect there to be maybe a little shake-up tonight. I don't know, right? I really don't know what to expect in the wake of that kind of press conference or speech tomorrow. But take it for what it is. It's a market-moving event tonight, and if he pulls an ace up his sleeve here, we may see some pretty dramatic movement, right, going into tomorrow's trading session. So 9 o'clock Eastern time, just a few hours away. I'll make sure to tune in to see if there's anything we need to be worried about for tomorrow. Probably not, but you always want to keep your eyes on all the new information coming out. As far as tomorrow goes, right, we get some big news tomorrow. As you can see here, we get the CPI number from, right, our friends in Switzerland. That's going to be the big news in the overnight London session. If you're joining me tomorrow inside the U.S. session, right, we open up at 8 o'clock Eastern time. We get some news from Canada tomorrow morning. You'll notice, boy, housing starts, Bank of Canada, lots of red star news events. Now, normally I wouldn't talk much about obviously I love our friends to the north, but usually these news events are not going to be big market-moving events. But I'll tell you, tomorrow we may see a little bit of action on crude oil because one of the biggest exports, right, besides hockey, curling, and Molson, is going to be crude oil, right? Tons of exports, right? They export a lot of oil, right? A lot of black gold, right, from our friends to the north. So I would expect there to be a little bit of action tomorrow early on crude oil, 8:15 and then 10 o'clock, right? Definitely appears to be 10 o'clock could be a big number tomorrow. So crude definitely could be an active session tomorrow morning. But be careful, though, on crude tomorrow because, remember, tomorrow is a Wednesday. And we don't have the benefit we had last week, right? Remember last week we had this report last week on a Friday, right? I'll tell you right now, I'm going to start sending a petition around to the DOE, right, or the EIA, excuse me, and ask them to move that report to Fridays. We were so lucky last week to have that report on a Friday. It was like 11 o'clock last Friday, right? Yeah, the gig's up, right? The gig's up. The party's over. We got the weekly inventory report is back tomorrow at 10:30 Eastern time. And just remember, whenever we have the weekly inventory report at 10:30, you got to be careful trading crude after 10 o'clock. So after 10 o'clock Eastern time tomorrow, we definitely want to be careful on oil. If it's moving too slowly, I'm not going to go forcing it. I always try to ease off on oil trading after 10 o'clock on Wednesdays, and then usually by 10:40, 10:45, we'll get through that news. I know a lot of you guys like to trade that crazy report, right, at 10:30, but very difficult to find consistent results, right, when you're trading those big news reports. So I always trade around those news reports. 10 o'clock on Wednesday mornings are always going to be kind of, not the cutoff, but just you want to be very careful as you go after 10 o'clock on a Wednesday. And then again, the big news, we talked about this last night, right, big news here is the FOMC meeting minutes. Now, this could mean for a relatively sluggish end to tomorrow morning's session. So it might be, kind of that typical, 8 o'clock till 10 o'clock, sweet spot there because you got the FOMC meeting minutes at 2 o'clock Eastern. The reason why these meeting minutes are going to be so important tomorrow, because, we don't care about all the meeting minutes, but remember, those are the meeting minutes from the December FOMC meeting. And remember, everybody's wondering if the Feds are going to pause their rate hikes right now. We just recently heard, from our buddy Powell, right? Powell, what did he say last week? I think it was. He said they're still waiting to see, right, if they're going to be raising rates. That was a very different stance he had earlier in the year, where they were pretty much pegging 2 more rate hikes in the year. So bottom line is, I wouldn't read into too much of this, but I would expect tomorrow there could be a lot of eyeballs reading over that FOMC minute report, trying to get some information based on, what they're saying in those meetings, the notes from those meetings on whether or not we're going to get a couple more rate hikes as we go into the end or into the first quarter of the year. So we may see some real fireworks off that 2 o'clock Eastern time report. I'm not usually someone to recommend trading the afternoon session because we usually get the meat and potatoes in the morning, but definitely something to keep an eye on tomorrow afternoon, 2 o'clock, 3 o'clock, 4 o'clock into the close. We may see some pretty darn good momentum, right, building up after that FOMC announcement comes out or the minutes are released at 2 o'clock Eastern time. Then, of course, we got news from China tomorrow night, the CPI number from China. Everybody's watching the economy in China right now. You know, you get the trade war going on between the U.S., right, and China. Who's winning that battle right now, right? CPI numbers will definitely tell the story. So it'll be a big news tomorrow night. We'll talk more about that tonight, or tomorrow night, right? Because we'll be back tomorrow night and we'll be ahead of that 8:30 news. So we'll talk more about that tomorrow night. And of course, again, lots of news tomorrow. We've got some news that I definitely would expect to affect oil early in the session. But again, get to oil early because you know that news report at 10:30 is going to really put a cramp in our style. And then, of course, don't forget, we've got on Thursday a big report coming out from the ECB, right, at 7:30 a.m. on Thursday. And then we get inflation report on Friday. So we get a lot of big news coming up that are likely going to move these markets. So tomorrow, Thursday, and Friday, we are just scratching the surface, expecting to have another great day in our trade room. Had a fantastic session today in our trade room with all of our members, and we're expecting to have another big day tomorrow as well. Don't forget, opening up 8 o'clock Eastern time tomorrow morning. Let's put the plan together, and let's start off with the oil market here this evening. Crude is bullish. You can obviously see that, with a spiking channel, a hidden channel, a trading range, and of course a measured move on the chart tonight. The spiking channel, I think, is the most important clue here right now. That spike up, right? That spike up into that channel. You can kind of see it's a sloppy one. It wasn't the clearest of channel there, but it was definitely a spiking channel. That spiking channel tells me to buy into a deep pullback, right? Spiking channels always tell us to look for buying opportunities with a deep pullback off the high. And then where could we look for that deep pullback? I'm glad you asked, because we can draw a trend line off of that high and then bring it right down to that low, that little sneaky hidden channel, right? I call these hidden channels, and we can use that hidden channel as that key level of support, right, to buy that nice deep pullback. So the goal is pretty simple, right? We're going to look for those buying opportunities on the deep pullback off the low of that hidden channel tomorrow. And again, we want to get to it early because we got that big news report at 10:30 Eastern time. And unfortunately, they're back to normal schedule again this week. We don't get the luxury of being able to get that report later in the day. We got that elusive big round number there, $50 a barrel. We thought they were going to get it before, right? Didn't get it again. You know, there is a trading range here. And you're going to notice that when we go to the S&P and the Nasdaq, you'll see these are very similar markets here. But one big difference, though, is this oil market was bullish all day long today. So momentum is clearly bullish right now. It might be the top of a range, and you'll see the difference when we go to the S&P and the Nasdaq in a moment. But I've got a ton of bull momentum right now. At the very least, we should be able to get one more leg going higher before we get that roll back down into that trading range, possibly after that news comes out tomorrow morning. So we're bullish. I want to buy at support. How do I do that? Well, again, I'm looking for that nice deep pullback. Spike and channel patterns are always something that tells me, right, to look for that nice deep pullback. We know the market is overall bullish here, nice bullish momentum. So we know that when we start seeing that nice deep pullback, right, we'll go below that moving average. Let me get this a little bit easier to use here, right? Nice deep pullback. I've got that rising support trend line. I'm combining that with some prior swings to create the battle zone. Also, the top of that range could be considered a reversal line as well. So I wanted to get that deep pullback. Once we get that deep pullback, I would assume, right, just like we saw in many situations already here and here, I would assume that these sellers here now are going to try to sell that next pullback, right? And you kind of think of it almost like this move back here where they try to go lower, they try to sell the pullback, and they fail, going right back up to retest that high. So I'd like to see a deep pullback. Right? How deep? Deep enough to get down into that hidden channel, down into that battle zone. Once we get that deep pullback, that will bring the moving average over. I can now look for those sellers to try a second attempt, right? We call this the two-try rule, right? 1 and 2. And then once I have those sellers trying to sell off that moving average, Now we know exactly where the stops are going to be, and we can now look for a buying opportunity up into those stop losses, right? One of the easiest ways to get your targets filled is to make sure you're buying at support and buying in an environment where the sellers are stuck and they've got to get out, because once those sellers realize they're wrong, they're gonna close their positions, they're gonna cover their short positions, become buyers, right? When they do that, and price will jump higher. I call these a two-try failure pattern, and then what we'll do from there is we're gonna grab that high, I'm gonna mark up that low, that will create the sweet spot at the low of this hidden channel, and we can look for a buy off of that low. So two entry patterns as we pull back. One, of course, is what we call the two-try failure pattern. The second one here is called that hidden channel pullback pattern. Now there is one more variation of this as we pull back. Let's say here first we get a strong move down, right? Then we pull back, another leg lower, draw a trend line down, right? Now I can use that trend line as my entry. We call these two-legged pullback patterns, right? The 2LP, right? The two-legged pullback pattern, another one of my favorite patterns. And you can combine that with the two-try failure, right? Get that moving average over. Let's go like this, right? Combine that with the two-try failure, right? Into that hidden channel, and of course into that hidden channel pullback. So great example there, right? You get the two-legged pullback pattern, the two-try failure, right? And of course that hidden channel pullback, all trying to go back up now and retest that high. Now of course that's if the market pulls back for us. What if we go sideways up here? Tomorrow of course is a news day on crude oil. What if we get stuck up here inside of a sideways range? Anytime I have a sideways range, I'm going to take the size of that range, copy and paste it down, right? And that will create a key level of, in this case, support. Okay, to the size of that range, copy and paste it down, that creates key support. Once we have that key support, now we're going to use that two-try failure pattern, right? That one, that two, and we'll buy up off of that low, right? One, two, and then once we see those sellers fail a second time, we'll buy as it goes, right, as it goes back higher here. Now, we know if the price pulls back. We know what we're going to do if price goes sideways. What if the market keeps going higher, right? What if we keep blasting higher here up through those highs? We talked about this last night. Anytime we find ourselves in a position where the market just simply won't pull back for us, that tells me I got to be a little bit more aggressive, which means I've got to look for those traps, look for those prices to get right below those lows, right? Get below a prior swing, and we'll buy from there. So if we do start seeing it continue here to push higher, we're still looking for that pullback, but we'll have to get a little bit more aggressive, right, at that time, buying with those trap lows for the move back up. Now, I would be remiss if I didn't at least touch on what a reversal will look like, right? But what would a reversal look like? A reversal would require what we call the 1, 2, 3 reversal pattern, and it's just like it sounds. It's 1, deep pullback. It's 2, a test of that moving average, and it's 3, a strong move off the moving average. Now, once we get that strong move, then I'm going to mark up that low. That's the critical resistance level. I'm going to mark up that low, create that hidden channel. Yep. And now we know where that hidden channel entry will be, right, off of that high. Target will be back down to those lows, right, 48.60, right, where we came off of. That beautiful example that we talked about from last night's newsletter, right, that beautiful example, get above it and use it and go. Great example there, right off of that low. We'll look for that buy off that low if we get back down to that low tomorrow morning. Again, don't forget tomorrow, 10:30 Eastern time, get to it early here on the oil market. Speaking of oil market here, one market that's looked a lot like oil tonight is the S&P. Now, the S&P is a very similar scenario here to oil. In fact, you'll see the S&P and the Nasdaq are very similar here tonight. S&P is bullish with a trading range, a spike in channel, resistance trend line coming down off this high, and of course a measured move there on that chart. The trading range tells me to sell the high of this range, right? And we kind of saw this today. Once we got this big collapse back down, right? So what's the difference between crude oil and the S&P right now? Because they're both at the top of these ranges, right? So what's the big difference? The big difference is this bad boy, right? Look at that, right? That's the big difference. The big difference is oil spent all day going higher, right? It's very difficult to justify being a seller right now on oil, unless you're a buyer taking profit, right? On the S&P, we go up, we go down, we go up. The likelihood of this becoming a range is pretty good, right? It's pretty good. That's the big difference between the S&P, right, and the oil tonight, right? What does that trading range tell me? Right? What does that trading range tell me? And I'm choosing to use a little bit narrower range. The trading range tells me to use that 2-try failure pattern, right? That's what it tells us, right? It tells us go out and let them try once, let them try twice, right? And sell back down into that range, right? And that's exactly what we want to do here. Now, the problem is, right? The problem is we have a spike in channel here, right? We have that big channel coming up, right? So I can't just try to sell into that channel, right? Like on crude oil, I want to buy the low of that channel on oil, right? Spike in channel tells me buyers will likely try to buy these pullbacks. So my plan tomorrow is I want to sell off these highs, but I've got to respect these bulls, right? They've earned it. Nice strong move up, clearly got a bull channel there. So what I'm going to do is I'm going to wait for these buyers to try a couple times, once, twice, and I'd like to use this trend line, right, as my key area, right, or my key clue for a level of resistance to use for that sell tomorrow morning. So this is always a tough spot here because you can easily see the trading range. Well, let me say you can't really easily see it. This is actually one of the more difficult trading ranges to find. What really gives it away, it's a wide range. Anytime I have a wide range, I'll split the widest ranges into thirds, right? If you have a really wide range, I'll split that wide range into thirds, like on gold. You'll see that in a moment. And you'll see in a wide range, the market will literally rotate inside of those thirds, right? Back and forth, right around that trading range. On a less dramatic trading range, right, on something like, a regular rate, trading range, I'm going to break that range in half, and then I'll take that half and project it higher. I'll take that half, right, and I'll project it lower. And what that does is it creates key resistance. Sorry, this is kind of tough to follow here. Key resistance and key support, right? So you got your main range here. I take that half, right, and where we are right now is we are up around that half. So that's what kind of gives it away, right? If you want to kind of know why I chose that range and why I think it's a range, because when you go back and look at that chart right now, right, kind of zoom out here a little bit, it's obvious we're bullish, right? But you take that trading range, you cut it right in half, you take that half, you project it up, and oh, look, easy, right? Do it again. Yep, right over here, right? So you can easily see we're on to something here. It feels like a range. It really does. The way this thing collapsed here today, strong bull markets don't do that. They just don't collapse off it like that. And that's the biggest difference, like I said earlier, between the crude, right, and that S&P. So the bottom line is I shouldn't say easy range because I definitely had to pull out my bag of tricks on this one to figure out where that range was because we did have such small, subtle differences there between crude oil and the S&P, and they are different trading strategies, right? I'm going to buy oil. Ultimately, I'm trying to sell this S&P right now. So spike in channel, right, says you can expect these buyers trying to buy this low down here. I want to sell off this high. So what we're going to do is we're going to use that old nested 2-try pattern, right? As it goes lower, let those buyers try once, let those buyers try twice, and then my goal is to use this trend line coming down, right, as a chance to sell back into that range. What would be even better would be if we could use a trap on this, right? That would be the ideal. That would almost be the guaranteed profit if we can get that trap high. So again, what you're talking about here is you're letting these buyers try once, you're letting them try twice, you're giving them 2 freebies, right? Giving them 2 swings. Go for it, right? Show me you mean it. One of the lessons I've learned over the years is to always make sure when a market is bullish, right? Nice strong bull momentum. what I'll do is I'll wait for them to try once. I'll wait for them to try twice. And you can see the little trap right there. It's a little trap right there. Everybody was waiting on that one, and they sold it right back down. That's exactly what I hope we get tomorrow, right? Go up, let them try once, let them try twice, right? And sell it right back down again, right? So use that one as your guide, and that's what I'm looking for right here off the highs of that S&P. And you'll notice I put the battle zone on here because I do expect there to be buyers here. 1, 2, right? And then we'll try to sell into those stops. Now, what if they do take this thing higher, right? What do we need to see? First of all, right, it's got to blow right through these highs, okay? Got to blow right through the highs. Anything except, right, anything less than a complete blowout higher needs to be suspicious, right? Needs to be questioned. So a pullback and a retest of that high does not do it. Right? Does not do it. We'll still look for 1, 2, and then back down again, right? Again, use that pattern, put it right there, right? So it's got to go through that high. Now, if it goes through that high, right, this now ultimately becomes a triple measured move. 1, 2, and then 3, right? So it becomes a triple measured move. Now, what do we know about triple measured moves? Triple measured moves, they're not a guarantee, but they usually mean a relatively deep pullback. So if we do see that next leg higher here, be very careful, don't chase after it, right? We'll wait for that 1, 2, right? Get that nice deep pullback, and we'll use that 2-legged pullback to be a buyer from there. Usually that's what's going to happen after you get 3. And then if we go 4 legs, usually 4 legs means you're done, right? That's about as far as the market will usually go, right? Obviously, there's an exception to every rule, but that's your typical scenario. So if we do end up blasting higher, don't chase after it, deep pullback, and we'll buy from there. 1 try, 2 try, trap high and back down. Now, how would the market reverse? What would a reversal look like? Don't forget the 1, 2, 3 reversal. 1, 2, 3 reversal. We're going to grab off that high, right? Find that 1, 2, 3 reversal. Find that hidden channel. And remember, don't be tempted to sell that first pullback, right? Wait for that. 1, strong move down. 2, pull back to the moving average. And 3, right, is that strong move off, right? We call these a 1, 2, 3 reversal. And then, of course, you got your hidden channel pullback. Boy, we have covered a lot so far in these first 2 charts. We've talked about 2-legged pullbacks. We've talked about hidden channels. We've talked about traps. We've talked about 2-try failures, hidden channel pullbacks. Boy, if you're brand new here right now, your head might be spinning for all this terminology. I'm going to throw you a lifeline. I've got a free trading class in the upper right-hand corner. If you're relatively new, I want to make sure that you know all the terminology, all of my favorite patterns, all the best technical analysis, and to make even better, right, I'll throw in hundreds of examples inside of this free trading course of great patterns that we find directly from our trade room. I'll put a link up top there, right, in the upper right-hand corner for you. And then don't forget, down below the video tonight, you'll also see a big red button down there, right? Grab that big red button. That big red button will also give you the ability to register for that free trading class. And then, of course, once you get that class registered, I'll see you inside the members section here at School of Trade, and you can get all the information you need about that trading strategy. So take me up on that offer, right? Grab that free trading course, and I'll see you on the inside of that free trading class. Okay, so S&P looks pretty good. Crude oil looks pretty good. How about some Nasdaq here tonight? Yeah, Nasdaq and the S&P are relatively similar here. Nasdaq is bullish with a trading range, got a bull channel, and of course a measured move. The trading range tells me to look for buying opportunities above the highs. Selling opportunities right off those highs, right, of the trading range. The channel, though, tells me that bulls will most likely try to buy the next pullback. So I want to sell off this range high, but the problem is I've got to let these buyers get it out of their system first. I'm looking for selling opportunities, but after the buyers try twice, right? Once, twice, and then I'll look for that sell going back down into that trading range. This is another tricky trading range. Now, this trading range, you'll notice, it's not very wide. So what I'll do is I'll take the exact 1-to-1, right? 1-to-1, you can see they stall out right there. That's the giveaway, right? Do it again right here. That's not a coincidence. You can definitely tell this range is here, right? So range expansion is there. These range expansions, I'll tell you, sometimes I get goosebumps how well these trading ranges work sometimes, because it's almost like they're on a string sometimes. They work so well. So we know we get a bull bias to it, right? We know there's definitely bullish momentum. What does a bull channel tell me? Anytime I see a well-behaved bull channel, it always tells me expect the market to make one more leg higher, right? Now, we know the buyers are going to want to make that next leg higher, right? We also know we're in a range, and we're right above the top of that range, right? So we have these two forces, right, that are going to collide. So what do? Much like for the S&P, I'm going to draw a resistance trend line down. I'm going to wait for them to try to buy once, right? If they don't succeed there, they'll try to go lower. And then again, that will now give me that 1, that 2. Boy, oh boy, I hope we can find that trap high, because that will be our shot there to sell back down into that trading range. Now remember, right, if it just double tops up here, right, if we pull back and we go back and we somewhat double top, it might go through a little bit, right? But like I said, in the S&P, anything besides a strong break higher here, and you really can't trust that breakout. So even if we do get a retest of the high, same thing. 1, 2, let those buyers, right? Let them try once, let them try twice, and we'll look for that sell going back down in. And again, if we do get the 1, 2, 3 reversal, this is a little bit different story than the S&P, right? The S&P is that big wide range. So if we do get the reversal, now we're probably going to be right back down around that range, right? I would normally say, find the hidden channel, right, and sell off that hidden channel high, but we're going to probably be a little bit too low on that chart to really want to sell into it. So the most I would imagine, I would assume here, if we do get that reversal here and we collapse back down in, you're going to find yourself in a similar situation like this, where we'll get that strong move down, and then either it's going to be a major 2-try, back up into the range, right? Major 2-try, or, right, like we saw here earlier on today, it'd be a nested 2-try. Strong move down, 1, 2, and then back up we go from there. So buy low, sell high, right? Avoid that middle, right? Avoid the middle of that, right, of that trading range. And again, as I said in the introduction, right, some of these moves appear legit, right? Crude oil appears to be completely legit as far as being a bull market right now. The Nasdaq and the S&P, because they're rotating back and forth right now, it definitely gives you that feeling, right, of a trading range, and I will question that. Again, like on the S&P, right, if we do see this thing really rally higher here, they may have another measured move up there, right? I've got 1, 2, 3 legs higher. If we get another strong leg higher here, you know what that means, right? That's 4 legs up. Now, these are relatively small legs, so we may see 4 legs into 5 legs here, but the reality, though, is be very careful as we go higher here. Wait for that nice deep pullback. I always like to look for that nice deep 2-legged pullback, use that trend line, right, and then buy off of that trend line for that move going up, right as we go. This could be, I was questioning this because these are very small measured moves. This could be 1 leg, right? If you take this one here, measure that into that, it didn't quite get there yet, so we might see something like this where it goes up, back, back. This obviously would be, right, it'd be up, back, up, right? If we do get that, then that becomes 1, 2, 3, right? So watch that big 3 legs up. A little bit confusing. This one's got some small measured legs to it. And again, no matter what, if we do get the big break up, nice deep pullback, and we'll try to buy from there. So Nasdaq, obviously very similar to the S&P, right? If we do see it go sideways here, here's one thing I didn't touch on the S&P. What if we see the market going sideways here? Now what do we do? Right? Now what do we do? Basically same thing here, right? So if it's still sitting here going sideways right now, we'll wait for that 1, we'll wait for that 2, right? If they can't get it, Because remember, right, under normal conditions, a 1, 2 below that range, under normal conditions, they'll blast this thing higher here. Well, again, I'm looking for that trap, right, that fade back down into that trading range, right, trying to get it off that 2 try. Let those buyers try a couple times, and then we'll look for that run, right, going back down into that trading range. And then again, if they do take this thing higher here, right, got to be a real strong break higher before we actually trust that move going higher. So very interesting charts there on the Nasdaq and of course on the S&P. The S&P, I think you've definitely got opportunity here to sell off the high. To sell if we get a reversal. But the Nasdaq, I don't think we have a sell for the reversal. There won't be enough room here, right? Probably going to be the only difference between the Nasdaq and the S&P here. Now, let's keep going here. About some gold right now. We got some yellow metal. Boy, what a great day we had on gold this morning, right, in the trade room. We pretty much saw this coming, right? We pretty much saw this coming. If you recall from last night's newsletter, we had that strong move down, right? This was the the battle zone, right? On last night's newsletter, of course, they got that strong move through, right? They give 1, they give 2, and then of course right back in. I think everybody was waiting to buy that thing, right? Going back into that range. It was a great example of how we were able to combine the analysis from our newsletter last night, right, with the short-term entry triggers in our trade room this morning. And again, that trade room's open up every morning at 8 o'clock Eastern time. So now, right, now we know we have those sellers on the ropes. And so we have a strong move back up. You'll notice the bears have tried twice, right? Bears tried once, bears tried twice, and I've got this hidden channel, right, coming up here now, and that's the good stuff, right? That's the good stuff right there. Buying low, get me a little trapola, right, those little lows there, right? Get me into that battle zone, and this could be a really big move here for gold bugs tomorrow morning, back up into that range. So I'm going to say gold is bullish right now. Get a trading range, got a hidden channel on here, and get a 2 try rule on the chart tonight. The trading range tells me to buy low, right? Remember, this is that big wide range. We talked about this last night, right, on the newsletter, right? This is that big wide range here. Again, see how wide it is? I split that up into thirds, right? Split into thirds. And of course, with that, right, with that third, we want to stay away from the middle, right? Avoid that middle, try to stay out of the middle, buy low, sell high, right? And because the range is so wide, remember, as we go higher, that momentum is really strong, right? So how do you absorb momentum? Nested 2 try. 1, 2, back down we go, right? That's exactly the same pattern we're looking for on the S&P and the Nasdaq, right? Then we roll lower. 1, 2, go, right? Same pattern we're looking for now here on the gold, right? So look left. Same basic idea there. It's a much easier pattern to find now here on gold. We go racing lower. Again, we found the 1, 2 major 2 try for the buy back up this morning in the trade room. And of course, it was the strong move down, now into the 1, 2, and we're looking for that buy now going back up right into that trading range. Range tells me buy the low, use the 2 try rule, right? I can see sellers have tried twice to keep this momentum going lower. So the market is primed for a nice short covering rally. And of course, the hidden channel will make for an excellent place to look for the sellers to fail and buying opportunities back up into that trading range. Now, one of the most common problems we have among ranges is sometimes these markets can really heat up, right? Sometimes they can get really aggressive, right, as they go higher back into this range here. So what if we don't get the pullback, right? You know the plan. I want to see it pull back here. I want to be a buyer, right, down in that battle zone here tomorrow, right? We may also see it rush lower, right? And if it rushes lower, I can use a hidden 2 try. 1 try, 2 try, right? So it doesn't really pound lower here. I can use a little inside 2 try there, right? Into a 2 try failure, right? Into a hidden channel pullback. Same patterns that we talked about earlier today on the crude oil, right? That is the 2 try failure. That is the hidden channel pullback, right? Those patterns I earlier, right? And again, don't forget, you can learn more about those patterns, right? Inside that free trading class. There's that, right? There's that information icon in the upper right-hand corner, right? Or you get that big red button right now below the video here on our blog, right, to grab that free trading course. So again, you'll learn more about those patterns, right? You'll learn more about all my favorite patterns inside that free trading class. But again, 1, 2, right, off of that low. If it does really drop back in, nothing really changes. We just got to kind of reset the count, as we say, 1 and 2, and then back up, right? We go from there. So pretty easy from there. What if it goes higher here, though, right? What if it doesn't pull back here for us? What if it really runs higher here? If this creates a spike in channel, right? Keep an eye out for a spike in channel. What do spike in channel tell us? Deep pullback, right? Deep pullback, like on crude, right? Deep pullback. Once we get that deep pullback, we look for that seller failure, right? Let them try once, let them try twice, right? Seller failure, and we're buying up from there. The big thing will be, though, if it runs back into the middle, right? If it runs back into the middle here, look for a possible trading range in the middle. If we get that range in the middle, 1, 2, buying back up, not much changes, 1, 2, right? I want to buy that second try, right? Fading the breakout to that trading range, a 2-try failure pattern. You'll see hundreds of examples of these 2-try failure patterns inside that free trading class that's linked up in the description of this video right now. And, if we go back to the highs here, right? If we end up going rallying back to the highs here, same thing we saw back there, right? It's a nested 2-try, 1, 2, and then back down. We go from there. Could be a very active day tomorrow on the gold with the potential for a short covering rally. Anytime we see this much bearish momentum, those sellers, they may not give up here without a fight, right? So don't be surprised if we run lower here. And then we've got to use that 2-try pattern. And we'll work this out tomorrow in the trade room once we have a little bit more information that we can use along the way. Gold looks great. Gold looks great. A little bit tricky, right? But gold definitely setting up here for a nice opportunity here for us right now on the yellow metal. And then let's wrap up tonight here on the euro. Boy, the euro, I talked about this last night. The euro has been a great market this year so far, especially in the overnight London session. Living in Los Angeles, it's always difficult to get up early enough to trade the euro. But if you guys are in Europe or if you're on the east coast of the US, the euro continues to give us some really great setups. Euro is definitely bullish, with a trading range, a hidden channel, a measured move, and a reversal line on the chart tonight. The trading range is the big clue on this chart, if you want my opinion. It tells me to look for buying opportunities below the range using the 2-try rule. My plan is to look for buying opportunities below the low of this trading range and hopefully combine it with the low of that hidden channel and that key reversal line. So again, we can easily see we're bullish here, right? Big bull run going higher here. And we talked about this last night, right? How do you know if it's a pullback or a reversal? It gets separation away from the moving average, right? Look back here. Look back here, for example, right? See how they get that separation away from that moving average? Right? That's what you need to really get a reversal. And you'll notice, right, they try it here, but they keep getting dragged back in. They try it here, but they keep getting dragged back in. Every time they try to get away, they keep getting dragged back to that moving average, right? And so we know what that means. It means this is just a pullback. It's not a full reversal, right? If it was a full reversal, this would be jumping off of that pullback off the moving average. Look how the buyers are jumping off that moving average here, right? The sellers have to show me something like that, and nope, they are definitely not getting it. So we know we're still bullish. It looks like a bear market because it's pulling back lower lows and lower highs, but the moving average is what gives it away, right? We know that from last night's lesson. On last night's newsletter, I think the big variable here, though, is this trading range. This is another one of those sneaky trading ranges, right? It's almost like these markets are trying to fool us right now. But again, if you know how to find range expansions and you take that range up, you can easily see they stall out right there. That's what gives it away. That's what gives it away. And then you can see down bottom, right, the market is so bullish right now that the sellers won't even get a chance to get down, right? Because usually what happens is, right, we get that, usually what happens is we'll get that break higher, and then the amount of that break higher will usually be the break lower, right? So you'll usually see it, equal on each side. But I mean, is this not a testament of how bullish this market is right now, right? It couldn't even get the pendulum swing, right? It couldn't even get an equal amount below that range here, right? And that's actually good news, because now that means, and again, I don't want to jump too early here, but whenever I have a trading range, okay, bull bias, what do? What's the plan for a bull bias into a trading range? Take the size of that range, bring it down, find support, and then use that support with the 1, the 2, right, the 2 try failure pattern. Now, look at this area of support down here, okay? Yeah, that's pretty tasty, right? That's a pretty good looking level there. First of all, if I draw the highs here, okay, bring it down to that low, lines up right around that spot, right? Same spot. Now, that could be a coincidence. It really could, right? Doesn't look like it. You got these 2 highs up here. Usually when you've got 2 highs like those 2 highs right there, usually that means something good's going to come out of that trend line down here. Okay, but it could be a coincidence. Let's be honest, right? It could be a coincidence. But what cannot be a coincidence is this little gem right around 14,800, right? That reversal line. That reversal line is just begging to be tested. It's begging to be bought up, right? And look what else we've got. Take that leg, and right? Beautiful combination, right? We have measured move support, range support. We've got reversal line support. And let's just toss on the low of that hidden channel, right, as a cherry on top. So we got a lot of support down there around that 14,800. I've got my trading range. Now all I need is a 1, a 2, right, and get that move going lower. Now, what if we go higher here, right? What if we go higher? What do we do here? Well, remember, this is resistance up here. Okay, so as we go higher, it's a bull market, but I want to buy up here. Can I sell up there? I can, but I have to use, right? Careful, right? Careful. 1, 2. You got to wait for those buyers. Let those buyers try once. Let those buyers try twice, because they're going to want to break through that high there. Let them try, and then you can start thinking about being a seller right off of that high. Be careful, though. Be careful, though, right now, because you can tell on the euro there's some big forces out there that are kind of perpetually moving this market higher right now. If you look at a long-term euro chart right now, really zoom out on this, right, you can see there's quite a bit of interest in going back and retesting, right, that 15,700 all the way up top there, right? Very bullish move here as we go up. So we know we want to be careful selling in a bull market. We can do it, but we have to have that nested 2 try, right, as we go up. 1, 2, and then, right, and then back down. And then again, the target is, of course, to get back into that range, right, on the opposite side. So I want to go 1, I want to go 2, and then back up in. If we sit inside this range, then what do? We wait. 1, 2, and back up. What does a reversal look like? 1, 2, 3 reversal, right? Yeah, 1, 2, the reversal. We talked about that already, right? 1, 2, the reversal. 1, strong move down. 2, pull back to the moving average. 3, strong move off. Now look back here. Okay, when you wonder why I don't sell the first pullback, strong move down, pull back to the moving average, and failure. Remember, that's the 2 try pattern that we're looking for down here. So if we get that strong move down, that pull back to the moving average, and we get that second try, I'm looking for a buy, right? I'm looking for a buy. Don't be naive, right? Don't think that because you have a strong move lower, it's a guaranteed second leg lower. Because how do you explain that previous leg, right? So make sure we don't take that bait. Mark that new low. Once we get that 1, strong move, 2, pull back to the moving average, 3, 1, 2, 3, reversal, then we can mark up that low, mark up that channel, and we can look for that channel to sell off of that high. Sweet spot is right there between that channel high, right, and that prior swing. Beautiful, beautiful opportunity there to sell if we can get that strong 1, 2, 3 reversal. Boy, oh boy, we've covered a lot tonight on this nightly newsletter. Don't forget, grab that free trading class in the upper right-hand corner, or hit that big red button right below the video tonight on our trading blog here at Sideways Markets. And as always, don't forget, right, we open up our trade room every morning, 8 o'clock Eastern Time, with all of our advanced members. Our advanced membership classes include the beginner classes, the intermediate classes. I wrap it all with unlimited tech support, unlimited time in our trade room, and all the bells and whistles that you need to have a successful trading career. I get a great free trial, right? Everyone's always asking, how do I get into the trade room, right? How do I learn more? That free trial, I'll send you an invite to our trade room tomorrow, right? Grab that free trial on the homepage of the website. Pick up the phone. Pardon my ugly mug there. Don't be distracted by that ugly mug, right? But call that toll-free phone number, right? I'll be sure to pick up and answer all your questions. We also have great frequently asked questions, right? Testimonials on our blog. If you want to learn more, don't be a stranger. I'm always here to answer all your questions. And as always, guys, my name is Joseph. Thank you so much for tuning in here tonight. Boy, what a game last night. That game was great until the third quarter. I still can't believe how good those Tigers are. Oh my goodness. Oh my goodness. I wonder how many more national championship games we're going to see Clemson, right, versus Bama for the rest of this decade. We'll see. We'll see. Bottom line, though, is hope you guys saw the game last night. I'll see you guys tomorrow morning back here in the trade room, 8 o'clock Eastern Time. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.